I'm gonna start with kind of when you wouldn't long a textbook conversion. Okay, so this is ES from Friday. Okay, so basically, so the inversion model, right? I'm just gonna draw this out real quick. Just do a rough sketch of this, right? So we have a low right here, right? So this is what we talked about last week. Okay, now I'm going to kind of talk about when you wouldn't long it with the SMT, and I do have a live example I want to show you. So we come down, make some sort of inverse right here. Okay, right here. We make that inverse, we target the next side. Everyone agree? This is what I've been teaching, right? You all understand this? Okay, perfect. So now for the SMT thing. Okay, so this is the basic model I've been teaching the last couple weeks. Okay, and there's a couple rules, so I really haven't taught all the rules I have regarding this, like, oh, I'll take it here versus I won't take it here. The one time I do not like taking it is if, let's say this is ES. Okay, so this is ES right here. And let's say we have NQ over here. Okay, and we go down like this. Okay, so we get this, obviously, right? And this could be an inverse or a BPR. Okay, which I'm going to make a video on the difference, but generally this is very similar. So let's say this is ES, this is NQ. Okay. And right here, let's say we actually, I'm going to change up this path a little bit. Oh god, this is not a good drawing. Okay, so I want to just bring your attention to this. Okay, so this is going to be like a question mark kind of line. We don't know if this line is going to work yet. I'll just draw this. So I'm going to make this red because we don't know if this line is going to work yet. So the other kind of rule I have regarding inverses has to do with this. Okay, and it has to do with, has one of the indexes hit the high? Okay, so see how in this situation, NQ hit the high right here? Okay, but yes and not. Okay, so like this is one of my rules surrounding inversions where like I will not take an inversion unless, I'll show you when I will take in a second. I'll not take an inversion in this case on NQ. I'll not long this if sorry, I meant to say down here. Okay, let me just, I can't erase this. I will not long an ES. Okay, let me just, this is kind of confusing for people because I'm trying to study my words a little bit. So look at ES here. Just let's reset for a minute. Look at ES, look at NQ. NQ hit the high, ES did not. If NQ hit the high here, okay, would I long the ES inverse? Or would you long the inverse? What I'm going to ask. Type 1 if you would, type 2 if you wouldn't. Okay, so 2, 2. Okay, so most of you are typing 2. So most of my premium members already know, like, this is probably not an inverse I long because I've taught this to them before. But like in this situation right here, this is just one of the. This is not a whole lesson per se. Like this is not. I'm not making a lesson on this. I'm just saying in this situation, like people have been asking me in chat, oh, why is this long failing? Why is this short failing? And you have to just make sure there's not an SMT. So in this situation, I would not long this. Okay, and I wouldn't long this because NQ took the high, so this is not going to always have a 100% win rate. But you have to understand, this is still going to have a decently high win rate if we took out a major sell side. Okay, if we did take out a major sell side, this is still going to have a decently high win rate, okay? But it's not going to have a 99% win rate versus if NQ didn't take out this high, I mean, this would probably have very, very high win rate. It didn't ship market structure. Yes, it did. You probably have not watched my last classes, and you probably don't understand what an inverse is. So this quote-unquote bearish value gap right here that we violate is the market structure shift. So the cone. Okay, this is the market structure shift. So I'm longing before the market structure shift because I know when the market going to happen. Okay, so this is just a little one of my rules I wanted to go over, where if we have this, I generally will not long. Okay, now what if we have, I'm going to make one more new diagram here. Okay, this is also a very good one. Okay, what if we have see, this is where I need the model the guy sent. I wish he was awake. Okay, it'd be something like this. Okay, so let's say we have this, right? And let's say this is buy side up here. Okay, so this is buy side up here, and then we have another one over here. And let's say we have not hit buy side of this one. So in both these are buy sides. Okay. Now let's say we had like an inverse from like right here. Okay, let's say we have two inverses in this one. So we have an inverse here, or BPR, and then we have another possible inverse here without the high being tapped. In this situation, let's say I only looked at this chart. Okay, let's say I did not pay any attention to this chart. Would you theoretically say the chart would bounce off this other inverse and hit this high? And this is all going to make sense in a second when I show you the examples. So theoretically, would it make sense? Type 1 if it, yes. Would this make sense if we theoretically, this is the only chart you're watching, we came back to an inverse, would it make sense for it to reach this high? Okay, and that should be obvious, right? This is not anything advanced. Okay, I'm not trying to confuse anyone. This is very easy. Okay. Yes, this all applies to FX, except FX has been trash. So this is very easy to understand. So now, what if we looked at this chart? Well, what if we hit buy side in this? Would you theoretically long this now? Yeah, no. Okay. And the thing I'd like to point your attention to is this is see how there this is two totally different examples. See how this is at the top, but this is potentially at the bottom. What do you think? Which one of these models here is going to have the higher win rate? This one at the top with this inverse, or this one at the bottom with this inverse? Pretend they both have the SMT, which is always going to have the higher win rate. Yeah, generally, so the answer is this bottom. Okay, generally this is always going to have the higher win rate because we hit sell side here versus here we hit buy side and here we didn't. But because we did hit buy side in one, it's just not an inverse I'd willingly take. Okay, versus I may actually would long this. Sometimes I will long this, but I never would take something like this. Okay, and I'm going to show you an example right now. Okay, so if we look at, I'm just going to keep these on the chart just in case I need to go back to them. Now, if we look at, okay, side by side from Friday, all right. This is going to totally make sense here in a second. All right, look at this. I'm going to go, so here's the high, here's buy side. I'm just going to mark this out. This black line is buy side, okay? So we hit buy side there, okay? And buy side for NQ's up here. Okay. I'm going to slow it down a little bit. Alright, now look at this. I'm going to mark the time when this hits. Alright. Let me just, so we hit it at approximately 3 o'clock, okay, 1500 on the dot. Right here. So you can clearly see, GDT, do you have that visual that you made? Were you the one that made the visual? The SMT one? If you so, can you please send that in here? Just so people can see that. Yes, perfect. So everyone look at that visual. I'm just going to pull this up real quick. So again, look at this visual right here. If NQ didn't take the high, okay, see how NQ does? We do not long this. Okay, this is not a good setup because ES already took the high. So this is a no-no. Okay, this chart's saying, even though it looks like it's going to go up, this is a no-no. And it would probably be better if you added X's here, but this is a no-no because we had that SMT. even though this might work sometimes, and even if this works, you can't care. Same thing with down here. If we have a bullish SMT, okay, and one didn't take the low, we're not going to take the inverse. Okay? And I'm going to talk about what's going to trump the SMT in a second. I'm getting there. Just wait for a second. Okay, so I would say that chart is a no-no. Okay, that's a no-no chart. I would probably add X's just to make it more clear. Leo, so that's another video I'm making on YouTube. So MMXM model and equal highs and equal lows go hand in hand, GDT. Okay, so look at this. So at 1500, right? See how you all agree that we took out buy side in here and we didn't take it on here, right? That's very obvious, right? We have buy side here and buy side here. Okay. One we did not take at the high. One we took at the high. All right. Now, look at this. Okay. Let's see if we have some sort of inverse fair value gap. Okay. We do. Okay. Now, would you long this? Is this my model I teach, first of all, and would you long it? Based on what I'm saying. Okay, but it is the model I teach, right? Technically, just from looking at it. Right, it's a single fair value gap. We displace above it. Still technically buy set above. Let's pretend. So, this is my model. We can agree. But, yes, I already hit buy set over here. So, no. I'm basically teaching you guys this is not going to be 100. This is not going to be as high probability. And I'm going to teach you when you can take it. Alright. Is it still here? It's not here. I'm trying to... I did execute this. Oh, wait, I didn't. I think I did here. So I did take some options account too. Okay, so notice. So I'm gonna teach this out there, but I did long this in options too. This is demo account, but I obviously trade options too, just because I like being in both, just to see when I sell my option. Okay, but in this situation, okay, this is not my model. This right here, but then this is kind of confirmation. Okay, and I'm gonna go over that in a second. But let's just keep going over to the right? So we know NQ hit this high, and we know, and I'm not only talking about IFVGs, I'm talking about a rule regarding them, and then I'm going over another thing, drawing liquidity. So right here, right, you still see NQ's not at the high. Okay. Now, let's look for another bullish inverse. Okay. Look right here. This is I can't not believe how clean NQ and ES is. So really right here, yeah, so this is just, it's very hard for me to lose in this situation. So we have not hit buy side yet, and we have hit it on ES. Okay, but the point I'm trying to get across is, do you see how this inverse eventually just fails and we fail to hit the next high? Okay, I think this is the big takeaway from this. See how eventually this fails right here? Okay, and we don't end up hitting the next high, right? Why do you think that is? It's because of what I'm teaching you, right? When there's that SMT, this high is not always going to be guaranteed, right? There's that SMT. If we take down this black line, just draw it from right here, and then I put this black line up here. Okay, we know there's still that SMT. Okay, so just when this happens, we know that not even the internal high here, this is not even external. This is an internal high. This high will not even be guaranteed, the internal high. And what happens if you can't even get the internal high? If you're in a trade and we can't hit the internal high, will it be loss or a break-even trade? Yeah, it's going to be loss. So that's why, like, if you want to win the most, okay, and have a very high win rate, you have to at least know the market's going to go to internal. So what I'm basically teaching you with this SMT rules thing, this rule-based thing with an SMT, is I'm basically teaching you if there's any sort of SMT, there is not a guarantee we're at least going to go to this internal high, which would be this red line. Okay, so that's, I think, something you guys have to be very careful with. The internal high is like the high we make right in the same leg, versus an external high would be a high from way earlier, like up here. So see how this is the most recent high? Okay, so this would be internal, this would be external, like outside. So that's all. So do you guys understand what I'm trying to say with this? Not the best explanation, but what I'm trying to say is eventually this inverse, which held and held, eventually we will still fail to hit this high, and this will fail at some point, which is why it's really risky long with SMT here. So do you guys try to get what I'm trying to say with this specific rule? This is more of a rule. This is not really an entry technique. Or I could do another explanation or try to make a little more sense. But all I'm saying is, if there's a potential SMT, this ends up failing eventually, right? And we just fail to hit this internal high. Versus if there's no SMT, would this probably be a good long, right? This is the 2022 model. Would this be a good long if there's no SMT? Yeah, probably. But because we had the SMT, we don't even know if the 2022 model is going to get us up to this high. Okay, and that's where I like trading. That's why my win rate's so high, because if I know at least we're going to hit this high, this internal high, I know at least I can put my stop to break even. Okay, yes, it does, McGee. There's obviously exceptions to this, but not very many. But type 1 if you kind of understand what I'm trying to say here. Be honest, because I could kind of re-explain this a little bit. I don't really know how else to re-explain this. It is a little complicated. I think the basic thing is, you know my rule. You know I don't like to long with the SMT, but I think some of you will have the trouble understanding why. I think the why is harder to understand. And it's because of how I trade. It's because I know when the market should hit internal liquidity versus when it shouldn't. And I don't know if it is or not if we have the SMT. And if I don't know if I don't know if we're gonna hit internal liquidity, well then how can I move my stop to break even ever, you know? Yeah, it's just the SMT from this high. So again, as long as you understand, like, okay, there's an SMT, stop looking for long setups that might be an inverse. As long as you understand that, that's good. If you can understand the why, if you can understand the why I would do that, that'd be even better. I would go back and rewatch this video when I've uploaded this on YouTube, because I think the why is important to understand here. Okay, but again, if I had to draw out a path right here, okay, my trading model is I'm looking for at least this high to be hit right here. Let's draw this. So I'm looking for at least this high to be hit, because that allows me to what? Stop myself at break even if my bias is wrong, right? And if I can stop myself at break even, that saves me from a loss. But what I'm teaching is, if there's an SMT, don't even risk it, because that means instead of actually going all the way up there, that means we could just not hit this high and go back down again, which means I would be getting stopped out for a loss. Okay, so that's just the whole thing I'm trying to explain to you guys. So does that make a little more sense? Hopefully. The why part versus, okay, you see me talk about the S&P, which makes sense, but you don't know why. So that's kind of a little better of an explanation. Again, this might go over some of your heads. You might have to rewatch this a few times. Yes, it's being recorded. Yes, it would, Traif. And that's like a whole nother class. Obviously, with a bearish SMT, we are looking for a short at that point. But that should already be kind of assumed. Again, because I will still, so now I'm going to show you when I actually trade against an SMT. Okay. Okay, and this is, I'm making a video on this. I already have a video recorded, but I'm going to kind of talk about it in here a little bit. So why do I actually end up longing this? So even though right? Even though right here, even though this is a bearish SMT, can anyone guess why I ended up longing it anyways, even though it's a bearish SMT? This is the other thing I gotta teach. Nope. Again, you don't. I've never taught this before, so I've never actually taught this. So you guys probably will not know. It's fine if no one knows. All right. My hint is this. If we go in the replay mode, why do you think, like, I'm not longing this, but then I see this and then I long? That's your hint. Why do I long this? Not displacement. I mean, yeah. I mean, displacement, yes, that plays a little into this. They both close above. Look at these candles, right? They both do close above. This closes above and this candle closes above. Okay, so I think the best closest answer to someone got is it's kind of a confirmation setup. So imagine this, okay? So let's just go in the replay mode. Imagine we're live time, okay? Now, in this situation, we know there's an SMT. We know this is not a good long, right? I'm not really interested in longing this because it's an SMT. Okay, and that's my thoughts at this very moment. So we make a swing low, and then all of a sudden, just this reckless green candle comes out of nowhere. Do you see how my opinion can change here just based off of this? So it's kind of like, okay, I'm not longing this low because it's an SMT. But then when I see a candle like this, it's almost like, okay, this is a very strong candle. This probably means the SMT is probably about to be violated, and it's a whole new leg. Okay, it's a whole new... See how there's a fair value gap in this leg right here? So this is the fair value gap I don't like because I'm not going to gamble if this fair value gap / inversion is going to work because there's an SMT. But then see how we get a whole new fair value gap and a whole new order block right here? Right? See how this is a leg and then this is the leg right here? So on that new leg, that we formed a whole new leg that's bullish. This leg was also bullish, okay? These legs are both bullish. But why do I trust the newer one rather than this one? Because this one, even though this is a bullish leg, there's an SMT. But then fresh price action, okay, fresh price action live time tells me, okay, well, we had the SMT. It gave us a chance to violate this for a potential short, but then we don't, and we form a really strong candle here. So I bet you the SMT isn't going to play out. So it's kind of like this is the confirmation setup telling me the SMT is going to fail in a whole new leg. Okay, I would say generally the leg that we get that has the SMT, okay, look at this, okay. If we think this is buy side, okay, you guys know buy side is up here. Would we theoretically long this bullish fair value gap? Yes or no? If we thought this was buy side. Nice, Matzi. Yeah, so theoretically, if this is buy side, we would be longing this, okay? So that makes sense. But see how this is on the same leg? If we go right here, see how it's in the same exact leg as the SMT? The SMT was just created at the swing high. So we get one swing high. This is the first swing high where you actually see the SMT. Okay, this is not a swing high yet. Why is this not a swing high yet? Yeah, and we need another lower high here. Okay, now the third candle closed, but now you can see like this fails because it's on the same leg as what the SMT is. But then see how we get new fresh price action after the SMT rejection? And see how this is like kind of the new price action telling me, okay, this is totally new price action. Obviously, you know never, ever, ever to long the same leg that we just got the bearish SMT in. Okay, this is dumb. But now we're kind of getting new fresh price action and validating this again, which tells me, okay, this SMT is probably going to fail. We're probably at least going to go to this high. So it's kind of just that, again, this is a little more screen time lesson. Okay, and this is something that obviously I picked up over long periods looking at the chart, because I always wondered, like, well, how do you know if this SMT is going to fail or not? So I think this is just the easiest way to put it, right? We never long the let's say there's a bullish or value gap down here, okay? Okay, let's say it's right here. And let's say this high, okay, let's say we just get the SMT in this high, right? We're not going to long the bullish for value gap after a trace, after one hits the high and one doesn't. But then when we get this new price action here, that's like, okay, maybe now we're allowed to long because this was invalidated. We're getting new fresh price action with a lot of bullish displacement. Maybe this tells me, okay, this SMT is probably going to be validated. So does that make sense? Hopefully that makes sense. So surprisingly, I was able to make this into a 30-minute lesson, which is longer than I expected. But that's why I kind of ended up longing, because I was like, if I just go back and pretend we're in live time, like when I saw this, I'm like, all right, this is probably not a good long right here. I was not thinking this was a good long because I knew we had SMT. So that's why you don't see me long this inverse. But then right when we got this, I'm like, all right, maybe now this is a good long because this displacement candle was so large that, okay, now the SMT is going to be invalidated. Okay, and transfer money from the impatient to the patient is an amazing saying. Amazing. I love that so much. I gotta tweet that. Yeah, that's an amazing saying. So this is basically saying, like, when we get the SMT, we're being patient. We're not longing. We know not to long. Even though we could have longed here, even though we could have, and even though so it would have worked, this is not really high win rate. But then right here, it's like, okay, now we know this has to work, right? We got the invalidation candle. Okay, now we think it's going to work. So it's kind of like waiting for the extra setup. You got a tweet that's devious? Oh, that's such a nice saying. And then right here, so we still have the bearish SMT, obviously. I'm just going to have this marked out. If we inverse this, see how this is a whole new leg, right? I would have longed this because it's a whole new leg. And you can see we took this low, and the body actually holds this BPR. So this is like another setup I probably would have taken, because if we violated it, which we did not, so there's no setup here anyways. But even though we have this bearish SMT up here, it's probably another setup where, yeah, if we closed above this candle, I would at least take it to this high because I can move my stop to break even, because this is whole new price action. This is whole new price action kind of telling us that we're going to go back to the high. So does this lesson, does it make sense to what I'm trying to say to you? So the first thing we talked about was when you wouldn't take an inverse, okay, with the SMT. And then the second one was if we get a whole new fresh price leg, kind of invalidating price going back down from a bearish SMT. If we get a whole new bullish price action, that tells us, okay, now the S&P is probably going to fail. Now you can take the inverse. Does that make sense? It's a very hard lesson to explain. I'm not going to lie. This is just something that I've thought about in my head. I just haven't explained it well. Yeah, it's like wait for the second leg to see if the second leg is kind of tells you anything. Right, you're never going to take the first leg. I don't care if it's an inverse. I'm never going to long this right here. This candle right here. I'm never longing this because this is the first leg off the inverse. I'm not trusting a long until I get like another giant candle. Yes, this is going to be posted. Also, for people in my premium, they've heard me a lot in live streams say, "Oh, I'm selling half here because ES hit the high and NQ hit and NQ didn't." When I live stream Friday, so for everyone in my live stream Friday, what I say? What did I say on Friday? Someone said, "Oh, that was a really good call." And this is something in general I've taught before. Some of you guys probably don't know this, but who was in my live stream on Friday that heard me say that? I think is Bcash in here. So Bcash, he was holding runners on NQ. He said his target was 15,026 or something like that. Okay, or no, 15,028. 15,028 is right here. Did his price target ever hit? No, it did not. Okay, and when we hit this high, 15,028 or 15,027 or whatever, I'm literally telling Bcash, I knew he's in there. I told everyone, I'm like, all right, yes, at the high, I probably would just sell here in NQ, right? Because I don't know why his take profit was 15,028, but I remember saying, like, I was like, okay, now yes, it's at the high. Even though NQ is not at the high, I would just sell more than here just in case. Yeah, so there's Bcash. So his price target is 15,026. Okay. Do they even match up? Let me see. Oh, I know. It was down here. It was right here. It was right here. I know. It was 15,026 up here. Right here. Okay, and if we draw that vertical line again, okay, you can see that. See how, like, right here we hit this high here? See how we wick up and then wick. Look how much we wick down here. We wicked down like 40 points before hitting 15,026, so he would have gotten stopped out, right? And you can just see why I say sell it when ES hits the high, because you can see just NQ as soon as ES at the high, ES just violently wicks down. Okay, and this is not something you're going to do right off the bat. Okay, you're going to need to be in trades and live examples where this happens and you get fucked because you don't sell when one of them hits a high. Okay, that's something you're going to have to experience yourself. I'm just saying, I'm trying to teach you before that happens. Just do it anyways. And you don't have to sell the whole position. I would just say sell more than what you were planning on selling. So I would say, like, scale, if you're planning on scaling 50%, scale like 75, 80% or whatever. Because there's a good chance once one of the indexes hit the high and the other one isn't really close, there's a good chance you get more of a retracement than I would like. And you can see we ended up retracing back like 50 points Friday night or Friday afternoon. So anyone in probably would have got stopped anyways. Okay, people ask me what time frame what time frame is this high on? What time frame do I have this high marked on? Both. It just depends on the day. I did it on Friday. No, Friday afternoon session I called the exact trades. I said I'm longing here and I said I'm selling here, and I called them. But in the morning session I did not. In the morning session I just called the draw and liquidity the whole time, and I said I showed where you could enter. I never said if I'm entering here or not. I mean, I hinted, but the Friday afternoon session I did say I'm entering here or whatever. It just depends in the morning. It depends on the session. It depends on how confident I am. Depends if I want to test people or not. Just depends. Most people in my premium have gotten my hint. I'll hint stuff very easy, obviously, and most people have gotten them. But I would say like 3 times a week I'll alert at least one trade a day. Or two. Again, I've alerted 4 trades. I've literally alerted 4 entries and 4 exits in a day before. They're all. It depends. I can't say when I do or when I don't. What was I just saying? Oh yeah, what time frame? This is a very advanced. This is a very not advanced question. No one's gonna get this right. What time frame am I basing this high off of? John's like, oh, what time frame is this high on? What time frame did I draw this high on? Exactly. Every single time frame. Good job. You guys are smart. People are like, oh, what time frame do you draw the previous day low on? Right? Think about how dumb that question is. How dumb is that question? Oh, Dodgy, what time frame do you draw a previous day low on? Like, how does that even make sense? You can literally draw a previous day low in every single time frame below the daily. You could draw it on the 15, 16, 17, 18, 19, 20, 20 and a half. No, this is not the previous day high, previous day low. This is just a random swing high. All right, and I gotta make this into a Twitter video, but I'm just saying, like, you can see any high. So if I look at the daily high, okay, what the hell is this? You can draw this daily high on every single. You might even be able to draw on the weekly. Yeah, you can draw it on everything from the weekly down. The only time frame you can't draw it on is the monthly. So every single time frame, the weekly down, you can draw a daily high. You can draw on the 4-hour. Like, do you get why I'm saying that, and why? Oh, what time frame do you use is dumb, and why time is actually fractal? Because a lot of people are like, oh, what time frame do you draw your highs and lows on? Okay, you can draw it on any time frame. You just have to understand, if you draw a 1 minute high like this, if I draw this 1 minute high, are you going to be able to see it on the 2 minute? Yes, you can. Are you going to be able to see it on the 3 minute? Yes, you can. Are you going to be able to see it on the 4 minute? Nope, it's not a swing high in the 4 minute. So that swing high only applies to 3 different time frames. Versus if I draw a high like this, okay, this high is going to apply to the 5 minute, 15 minute, and then it's finally gone in the hourly. But it's going to apply to more time frames than what like a 1 minute swing high down here would apply to, right? And that's a very, if you're in here for that, I'm going to make that a Twitter video, but again, that's why I hate people asking, oh, what time frame do you draw this high on, right? Because, yeah, you got to know, look how much obvious this is. Look how more obvious this is compared to this one. This is still a swing high, but this is, if you back away from your screen, you can still see this. So I bet you this is going to be a swing high in like a 2 minute, 3 minute, 4 minute, 5 minute. And that also takes screen time. Like, it's going to take screen time to understand that you cannot see this on a higher time frame, but you can see this. So you're going to understand that this 1 minute high is going to be a lot more significant than like this high, right? That's why I don't teach you guys. That's why I'm not teaching you to sell at this. I'm teaching you to sell at this because this is the higher time frame high. This is probably this has a good chance of hitting, right? Does that make sense, everyone? Yes, this is very huge to understand. Yeah, exactly. There's gonna be more stops. I mean, it's not sellers and buyers, but it's just more stops. There's gonna be more stops. Orders, yes. There's going to be more orders up here versus orders right here. So, can you please go through your BPR inversion? Can you please go through your BPR inverse FVG strategy, please? I have 3 YouTube videos. They all go over it. I'm assuming this is probably your first time in the class. Yeah, I'll post it in. Make sure you have notifications on for the YouTube video channel. There's a YouTube video channel in this Discord. If you guys want my, like, when I say something important, make sure you turn on dodgy alerts. Go to the reaction roll channel. Right here. Right here, reaction roll. Click this button right here. This react button. And I'll like at you when I upload a video or whatever. Okay, do not click this check mark. This is not the thing. It's this right here. I should have made this much more clear, but can I even edit this? Yeah, I can't edit this message. So it's this line right here. Wow, I can see how this is very confusing. That's my bad. Oops. But yeah, I'll just tag you when something's important. What is the fundamental reason why there are more orders at higher time frame turn on liquidity versus lower time frame? I can delete the reaction? What do you mean? So I'm gonna try to answer his question, reliable question. I can delete the check mark. How? Oh. Yeah, I'll just delete the message. Alright, let's do this. Alright, there we go. Alright, so I think so. I was going to talk about drawing liquidity in a higher time frame, but that was 45 minutes. That was clear as mud for you. I thought that was a good thing. Then he said the word mud, so now I'm thinking no. Do you know what an SMT is? I have a video on SMT. All an SMT, yeah. So knowing an SMT is kind of like a prereq. No, an SMT. All an SMT is when, see how right here. See how on the 15-minute. See how if you draw a vertical line at this high. See how it was never hit right here, and see how it was hit on ES. Right here. See how one high is hit and the other's not? That's what it's called, the smart money technique. It basically shows smart money could possibly be reversing the market here and looking for shorts. Does that make sense, Flight? How one hits and one doesn't? And this is a bearish SMT because it's at the highs, versus a bullish SMT has to be at the lows. Look, right here, this is a perfect example. See how this doesn't take out the low, and see how this does take out the low? Look how much we bounced after when one took out the low and one didn't. See that? That's an SMT. It's, think about it like an indicator, but it's not an indicator. It's live price action. It's like a buy signal indicator, except you cannot buy without, it's a divergence, right? You can't, it's a divergence for confirmation. So let's say you see an ICD 2022 model, okay? Let's say you see a break of structure, an inverse fair value gap in the model I teach. And let's say one model, you see there's an SMT below, but then later, an hour later, there's not SMT below. I'd be more likely to take the one with the SMT rather than the one without the SMT. So you can take both, but the SMT is kind of an extra confirmation. Yes, it would have. And you can see these both end up getting inverse. So yes, it would have been a good trade when this gets inversed. All right, at this point, this is just the inverse model. Okay. You're 0.3% away from blowing a 10K counter phase 2. Tips. Size very lightly. Size like very light, and see if you can just make it back little by little. That's what I would say. You have more of a chance of failing it, and then you would get a new account. But if you really, really, really want to save it, I just size very lightly and try to make it back. Size light so lightly that you can make 5 trades, and if you lost those 5 trades, the 5th trade would blow the account. Chill, Eli. I bet you it's a... I bet you it's a 4x. Sounds like a 4x account. You can't full port news because if we wake down and back up, you're going to lose your account. So I just sized down to if you can get 5 losses and blow the account on the 5th loss, do that. And see if you can make any back. I hope, John. All right, I think I'm gonna end it here. Flight, you have to be in my live streams this week. You're gonna ask me these questions in my live stream. I'll show you live. Like if I see a SMT in live time this week, you still got a decent amount to learn, it seems like. But I think I'm going to end this here, okay? I think this wasn't the clearest class. This was this is very hard to explain what I tried explaining today. So if somebody didn't get it, try rewatching it. But I felt like this class you needed to have some knowledge of what I've already taught to kind of understand it. Yeah, it's very tough to explain this. I could write it up. Yeah, you're right. How often do I backtest and study charts and learn? I'll backtest like once every week or two. I don't really do it as much anymore. I think reading live price action for me is just the best thing I can do now because I've already backtested so much and I know so much where I think just it's just watching the chart in live time that's going to give me the best experience. So I mainly just rely on watching the chart 3 hours or 4 hours a day, and that's my back testing. That's my forward testing. So, all right, I think I'm gonna end it there. I'm gonna upload this now, so make sure you check that out. Appreciate you guys, all you coming, and yeah, I will see you all later.